Trevor. Thank you to the Maritime Standard for this opportunity. I had to make a decision today whether I stay with my wife for the full day or I speak at the Maritime Standard. And I hope I took the wise decisions. We'll see later on. So, Gulf Navigation perspective, we established in 2003 as a private company, and then we went listed in 2007. As a company today, we have 150 workforce with about 22 different nationalities, 27% women. In terms of business, we have three main business lines: ship owning, with a main focus on tanker business and a small exposure in the offshore business, and the ship management, as well as the ship agency. In terms of public information, we are listed in Dubai Financial Market. We are the only maritime company listed in Dubai Financial Markets, with that being a good or bad thing. This is debatable. We have about 13,000 shareholders divided into corporate institutions, family offices, and individuals. Purpose of this presentation basically is to share with you our experience for the past 2 years when we turned around the company from a very difficult position to a position where we are proud of today. The capital restructuring overview that we've taken over the past 2 years was basically we looked at the asset optimization, the liability opportunities, and the operation excellence. And what we found out is that the main problem that the company has suffered from is the liability side. On the asset side, the vessels were 100% optimized. Utilization was at a high rate. Asset revenue is kind of firmed, so there's really no opportunity to expand that business for the time being. When we looked at the liabilities, we found that there's a lot of opportunities and there's a lot of improvement to be done, and that's when we started to think about what could we do. So the first thing we've done is to create a financial instrument, which was a mandatory convertible bonds, and it worked as a blanket bond to the existing the existing financiers and banks and creditors, and we kind of set it up in a way that's attractive and risk balanced. And we offered it to the financiers and to the creditors to convert their debts into this facility and benefit from the evolvement of the share price and evolvement of the company growth and expansion plan. And that has worked out quite well, with the majority of lenders and the majority of the creditors agreeing to convert their facilities into the mandatory facility. And we kicked off this process in 2003 with a closure in early 2003. And we also exercised one purchase option of one of our vessels, which we thought also is a great potential for us to generate more cash, and eventually sold that asset for a remarkable profit. And we used the cash in a better way to, first of all, to deleverage the company and take the leverage from a high level to a very, very low level, which is going to set the ground for us to move up again. So today we are at 29% as a group, leveraged in general. And we think this is a very good ground for us to hit the market again and start to re-leverage the company with better terms and better values. On the equity side, we managed to raise 220 million dirhams in the first row, which was through a fund that was set up in the IFC. This has completed already, and it was also a very, very successful round. We've been told that we had oversubscribed for this facility, which means basically the market is healthy. It's just about the awareness, I think, of the industry and the awareness of the companies that might be a good opportunity for investors. I think as a maritime company, being the only company listed in Dubai Financial Market, we probably find it a bit difficult to benchmark and encourage more investors, because the market is still not mature enough, in my view, in terms of attracting more investors into the shipping industry. Whereas if you look at other industries in the same financial market, we've seen a quite attractive turnaround of investors. That one of the major fund or several funds basically has increased their exposure in the Dubai financial market remarkably well this year, investing in about 16 different companies in a particular industry. And that's where we said, in my view, we should look into how can we market more the maritime industry and the shipping industry in general to attract more foreign capital. In 2024, we have a lot of initiatives that we are working on. We are looking at different solutions. Obviously, as a listed company, it's always a race for capital. So we're looking at finance project, we're looking at tokenization of assets, we're looking at blockchain financing, we're looking at different aspects of what financials can offer. But again, I mean, we're looking into it in a quite wise way in terms of what the benefits, what the pros and cons, and how can we really, embed it within the decarbonization initiative that we are working on for our strategic investment. Now, the use of proceeds that we are generating is going purely going to go to expanding the fleet. I mean, as a shipping company, obviously, it's either you expand or you contract, so you have no other choices. And that's where we thought this year is probably going to be quite challenging, but we will still, I think, take an exposure in terms of asset acquisitions, and we will be looking at acquiring more assets within this year to expand the fleet. In terms of capex, we have tried to develop the existing fleet in a way that we can, leverage on what's available in the market in terms of decarbonization. So every dry dock we took this year was basically done in a way that we developed the vessels to implement solutions that are a low-hanging fruit for us, and it's fit for purpose for the next few years where the vessels are still able to trade. So we've done a few solutions, technical solutions, and we've done coating of propellers, we've done PCPF solutions, and so on and so forth. Financial highlights. As I mentioned earlier, we thought the liability side of the company. Well, first of all, I think any asset-based company, I think if you fix your balance sheet, your P&L will follow immediately. So that's why we thought the liability side of the company is the most important thing. And then we looked at the liability and we started to reduce our exposure in terms of debts and liabilities and increase our shareholding value. By that, we managed in the past 2 years to reduce the liability from 450 million dirhams to below 200 actually, or 200 million dirhams. There's about 40% decrease in liability. We have exited most of the expensive financing facilities that we have, and we refinanced the fleet mid of last year. So we dropped the interest from a 2-digit interest to below 5%, which was a remarkable saving in the P&L. We have taken the decision to keep our financial objectives as clear as possible. So we're looking at a clear capital structure after we've done all this restructuring, and we will be maintaining a net debt to equity below 1 times, and also the maximum net debt to EBITDA will be not beyond 2 times. So we will continue looking into the refinancing opportunities. I think we with 29% leverage, we have a great opportunity to re-leverage the company, and this is going to work out in the favor of the company in terms of releasing a lot of cash flows for the company to expand this year and beyond. I have 1 minute left, so the share price, as you can see, I mean, the index is clear there. So we've, in the past 2 years, increased our share price by 900+%, which is remarkable. We interacted 20% foreign investors as part of the MSCI index. I think we have a chance to increase that maybe over the next year. Our market cap is about 5 billion dirhams, and we trade at 6 times our net asset value. So there is a great opportunity for leveraging. Potential challenges, I think we're not different from any other ship companies. We've got the geopolitical risks, obviously Russia, Ukraine, the Middle East conflict. I think in the conference on the summit yesterday, the World Government Summit, they've indicated that there's $17 trillion every year spent on the conflict. So that's a huge amount of money which could be utilized. And then we've got the elections which is taking place this year, across out the year. We're not sure how this is going to react on the geopolitical risk, existing geopolitical risks, and also the China-US relationship and the trade arrangement and so on and so forth. Economic downturn, obviously the oil price will play an important role. Are we going to stick to $80 per barrel, or is it going to be increasing or decreasing? I am on belief that this is going to be beyond 80%, I think, towards second half of the year, where we'll have a lot of things that's going to reflect on on that time. So maybe we will certainly, I think, sustain the $80 per barrel in my view. A global pandemic, again, it's not a future-proof yet. Maybe we have solutions, but we're not yet there. Recession is another possible, I think, factor, which is we have to watch out throughout the year. And obviously the interest rate, where we do believe that this is going to be dropping towards the end of this year. But again, it all, I think, linked and depends on how the things evolve over the year. Regulations and compliance, regulators, ship owners, investors. I think it's a race to 2050, net zero, not zero, it's net zero, and that's, I think, where we're still a bit uncertain. Until we say it's a net zero, we're still uncertain, and we still, give people opportunities to really work around the decarbonization and the strength of our belief about decarbonization. I think, as I said, there's unfair race. I'm not going to mention who's who, but I think it's investors, ship owners, and regulators, and there are different speeds and different scenarios, and maybe there's no one size fits all. The way forward, we're very optimistic about the company, about the future. We are very bullish about the market, so we are investing and expanding on different aspects of the business. We looked at the entire circle of where we should fit, and we have identified the area where we will be investing money and expanding operations. We will be looking at the end-to-end logistic solutions, and not only for commercial purposes, but also for being able to comply with what the right initiatives for the decarbonization. So we want to look into our IMO, scale 3 basically, and how can we be able to, make sure that we are in the right position to control the entire supply chain and make sure that we are in compliance with the IMO regulations 1, 2, and 3. We have done a few joint ventures where we think it's not about the size of the company, it's about what you bring into the table, what you believe, and how you stand against the others. So we've set up a joint venture with a company called Scorpio Tankers, 180 vessel owners. We're up and running now with a pilot project of 8 vessels, and I think as soon as we are in a sound position, we will extend our services to third parties. We do have a lot of opportunities there and a lot of things to offer to the market to disrupt the ship management. We have also co-invested with a company called Inspectra, which I think part of BV Group, where we invested about $2 million to build a state-of-the-art laboratory in Fujairah, which is, I think, a work in progress as we speak, and it's going to be ready towards July, August, I think, this year. And then the latest introduction of the drone operations in the Northern Emirates, and this is something that's hopefully going to be active towards the end of this year, where we will introduce the drones for the agency and port operations. And with all of this, we're keeping in mind that the sustainability is the core of any other project or any investment that we're doing in the near future. So thank you very much for listening, and sorry if I took a bit of lead.
Thank you very much. Thank you.